We're going to start today talking about qualified funding long-term care. I know this says qualified funding whole life, but the long-term care insurance product we're going to be talking about is on a whole life chassis. It is an asset-based or linked benefit style long-term care product underwritten for morbidity. In today's call, we are going to talk about how to quote this easily through the Fortress Brokerage Agents portal. We're going to have an understanding of this product and how it works, that it is I call it a horse of a different color. And then we can do a little product Q&A. If you guys have questions, I'll be here to answer them live. We can just have a general conversation. There are going to be some take homes that you guys can take with you today. I have a package for advisor materials, and then I have a package for consumer materials that you can use as well with your clients to get the ball rolling. And we'll do some final thoughts on the agenda. Just a couple of things here. We're going to help you plant the seed with your clients in terms of long-term care, get them thinking about long-term care. We're going to give you some ideas on how to overcome some of the unknowns that may be in their minds. And then this is an innovative idea that we're going to bring to you so you can help a client fund their need. So let's get started. If you are contracted already with Fortress Brokerage Solutions, you should have access to our website. If you do not have access to our website, or you would like to gain access to our website, you can register. We're going to go ahead and log in. Once you are inside the Fortress Brokerage Agents portal, you are going to go to Sales and Marketing, Long-Term Care. And here you will find the Asset Care Long-Term Care Quote Engine. This is the one we want, guys. This is going to bring us to One America's Care Solutions calculator. Now, when it comes to using qualified funds, yes, you could put the funds into an annuity care, but that's not what we're talking about today. Today, we're talking about the qualified funding asset-based long-term care whole life plan in particular. So what's important to consider when we're thinking about qualified funds? Well, you have to be old enough to touch them, 59 and a half years old or older to touch them without a 10% penalty from the IRS. So this calculator is not going to work if you're looking at someone who's under the age of 59, but it will at 59 and above. Let's just do a 60-year-old. How about we do a 60-year-old single, and then we'll do a joint concept. So I'm going to do John Doe, male, age 60. Let's leave him as non-tobacco. We're going to do the single premium annuity option. And in this instance, John Doe is going to take funds from his 401k or his IRA. So it's going to be qualified money. We are going to include inflation at 3% on our AOB, and I'll talk to you about what that means. And we are going to move in from his 401k, we're going to move in 100 grand. I'm going to include the continuation of benefits rider. We will walk through what this means here in a second. And I'm going to put it at a 4-year. So this means we have 4 years on continuation of benefits and 2 years on acceleration of benefits, a total of 6 years duration. And I'm going to have inflation go for a lifetime. Calculate. All right, they give you this quick result, which we can take a look at. I think it's easier to look at the PDF, so I'm going to pull the PDF up for y'all. All right, so here's the proposal for John Doe. We're going to come down to the important page that explains everything. It's the one with the bars. You can remember the ones with the bars? This is where you get all of your information. Now, what we have here is $100,000 coming out of John's 401k or IRA. It can also come out of a 403b plan as well to fund the need for long-term care. What's going to happen first is it's first going to go into an annuity. There is an annuity tied to this plan. You're technically having John in this aspect buy you two products from you at the same time, a hybrid long-term care plan on a whole life chassis and a qualified annuity. So that's how we keep the taxes down. 100 grand goes into the annuity, and it's going to siphon over the course of 10 years into this policy. So obviously this first year, and over the course of the next 9 years, the annuity contract is going to completely deplete and pay into siphoning into this contract. So what does that mean from a tax liability? Your client is going to get taxed on these funds every year for the next 10 years, okay? Which ultimately, if you think about it, on 100 grand isn't that much of a tax bite. Of the 10 pay premium, you're going to have 7,900, call it $8,000 come into the life portion. I call this the base of the contract. And then you're going to have $4,500 come into the long-term care portion of this contract. That's your continuation of benefits rider. That's that COB. The life is AOB, the LTC is COB, okay? So the way this works is this client is going to be able to get on for the $100,000 he puts in, $5,181 a month starting day one for the first 2 years. This is the acceleration of benefit rider. He's going to get $5,181 for the first 2 years he goes on claim. After those 2 years, you've killed the life portion of the policy. You've used up a full 124,000 and change of long-term care. This is your accelerating 5,181 from 124,353 over the course of 2 years, month by month. So essentially, if your client uses, let's say, 1 year of monthly benefit, your client should have about half of their death benefit left, okay, if they should die. That's what would go to their beneficiary. If they use the full 2 years, well, now they actually issue this contract with 2 policy numbers. This policy, the AOB, the life portion of this contract is dead in the water. They've used up the full death benefit, okay? And now they roll over to the second policy number, the continuation of benefits rider, COB, which is for the next 4 years of coverage in this design. And the next 4 years of coverage is going to have, in both instances, inflation is growing on both of them. I have 3% inflation growing on them for both. And wherever they pick up in terms of how many years they've gotten down the line with that COLA added, they will continue their benefit until they've received that last 4 years. So in this instance, a total of 6 years. This policy does come with a built-in waiver of premium. Obviously, that's a moot point on a single pay contract, but remember, we're paying over the course of 10 years from the annuity into this contract. So technically, even though they made one single payment, you would think, oh, well, there's no waiver of premium because they only paid once. Not so, because you have the funds siphoning in from the annuity into this contract. So they technically could go on claim in the first 10 years, and then the premium would be waived. That's siphoning in from the annuity to the asset-based long-term care plan, saving them funds on both sides of the spectrum. I hope y'all are following me. Let's look at it a little closer. Here is the ledger. The ledger is going to show you the annuity income payment. Okay, so they do give you a guaranteed fixed bonus on this contract. That's why you see it's a little bit more than what you would expect at, $100,000 broken up 10 ways. And that's going to come out of the annuity and go into the life of the contract. So there's your 10 pays. But you're technically going to have 2 death benefits for that first 10 years, right? You're going to have a death benefit out of the annuity contract that's still living and still paying into the whole life contract, plus the death benefit out of the hybrid contract. So you have a total death benefit column here, and it is going to show you that it's dwindling down. The annuity is reducing until it gets to a fully paid in amount. And now here's just your life policy death benefit. So I hope that makes sense. There's a surrender value here between the 2 contracts, of course. And it's going to show you what the total long-term care benefits bucket is for this client, John Doe. This guy reaches $1 million in 32 years with his inflation on both his acceleration of benefit and continuation of benefit riders. So just remember, these are 2 pieces that work in tandem. But the policy is actually issued with 2 separate policy numbers, one for the AOB and one for the COB. That way, when someone uses up the full acceleration of death benefit, that policy is dead in the water. the death benefit's gone, and they roll over to the continuation of benefits rider, which you can think of as almost like their traditional standalone long-term care piece. Now, we're going to go a little further. This policy we designed for John. If John wants to include his wife, we can include his wife. Going back to the software, we would simply change it to add Jane. Put Jane in here. Let's say she's 64. And then it's going to calculate it for a joint situation. Now, instead of the 51 a month approximately, it's going to be about $3,000 a month approximately, or 6,000 approximately jointly. The one thing I want to tell you here is if John perhaps didn't want to fund this need for himself, but he wanted to fund it for Jane, he could do that. He could use his qualified funds to fund the need for her. In that instance, all we're doing is filling out the qualified funding whole life application for the annuity on him. And then when money comes out, he pays that taxes, right? Because that's his qualified funds that the IRS is going to come after their money. They want that. And it's going to fund into the whole life contract for the benefit of his wife for long-term care. So that can also be done too. A lot of people do not realize that. This is currently the solution that you would use for qualified funds to fund long-term care at the moment. There are other insurance companies trying to work out solutions on their end to have a seamless process like this, but they're just not there yet. Okay, so just know when you're filling out this application, you have two apps. It is two products. One funds the other. The client does not have to do the movement of the funds over the course of the 10 years themselves. The product does that and the carrier does that. Let's move on. I want to talk to you guys about some actionable take-homes today. Well, let's stay on track. We talked about how it works. Let's do a Q&A real quick. I want to open up the lines and offer anybody that wishes the ability to ask questions the ability to unmute and ask the question if you have any. I have the first question. Because this is a life product, is there any health issue problems? So this product is written with accelerated underwriting program, meaning the insurance company is going to look at it first for the standpoint of, can we approve these people? Are they healthy on the face of what we've got? If they cannot, they'll come back to Fortress. They'll say, hey, the client didn't get through accelerated underwriting. We're going to go ahead and we are going to request a paramed exam and medical records. My company will pick that up. We'll order the paramed exam. We'll order what records are necessary, and the full underwriting will ensue. So yes, there could potentially be underwriting here. More than likely, there would be underwriting here. It's not often that I see people get through accelerated underwriting. Every now and then I do see it. When it does happen, it's usually an approval within 36 hours of the application being received and the client completing their telephone interview. So I want to go over some take-home materials and efforts because we're at 15 minutes. We gotta finish this up. I have a financial professionals brochure, flyers that I'm going to be sending out to you. It talks to you about qualified funds for long-term care, gives you some ideas on how to position this with your clients. I really like this feature here. If you do the QR code, it'll bring you to a video that is a consumer shareable video. You can text this video to your clients to get them thinking about planting the seed of long-term care sales. We talk about long-term care for the affluent. A lot of people don't think about long-term care for the affluent. Oh, they can self-insure, but should they? Should they? So this is really important that you take a look at that if you're working with affluent individuals. And then down here, I really like this piece too. We give you all of our life-based linked benefit. This is your hybrid contracts with all of our insurance carriers pitted against one another. So you can kind of see there are differences where one may play better than the other. Maybe you have a client that's more death benefit focused. Well, that might be a Hancock play. Maybe you have a client that wants lifetime benefits. That's definitely going to be a One America play, and so on. And you will also get the annuity-based linked benefits comparison as well. So anyone that's on this today, you will on this call today, you will get this take home. You will also get the brochure package that we've put together for consumers that you can share out. This is generic. This is not going to be any specific insurance companies. Okay. We have a brochure that you can share to your clients as well. I'm going to just scroll through here real quick. Turning idle assets into living security. Remember, planting that seed with the customers. Here's what we think we can do to help you guys find a way to fund this need easily. Again, using an inherited IRA to fund this need. That's an idea. You know, you're getting money from someone that loved you. Why not put it to use for making sure you're taken care of in the long run? Unlocking tax-free dollars for long-term care. So you're going to go ahead and get these take homes from me today. And I think that they will be helpful in helping you market these things. I'm going to wrap it up and just say thanks for joining us today. You know, we went a little bit over our time in 15 minutes. If you joined late, or if you have someone you want to send this to, I'm going to be uploading this to our Fortress Brokerage Solutions YouTube channel. I'd like to get it up before the end of the day. I will send out an email when it does go up. If you should have any questions following up with me, please send me an email, give me a call. Happy to help out. Thanks, guys. Have a great day.